ESG was once the acronym on everyone's lips. Now it's something of a grey area amid an ongoing backlash. The conference board weighed in on the issue ahead of proxy season, saying companies should, quote, be prepared. According to the Sustainable Investments Institute, investors have filed 68 anti-ESG proposals this year. So is this just a reset after an overcorrection or the beginning of the end? Let's talk about the intersection between sustainability and finance. Joining us now, David Callaway, editor and founder of Callaway Climate Insights. Good to have you, David. So, I mean, we really
Hello,
did
Rachelle.
see some of this. Good to see you. We really did see some of this investment and this anti-ESG sentiment really hit a peak when it came to the lows that we saw last year in terms of companies investing. Where are we now in the conversation when it comes to ESG and climate investment risk?
Well, unfortunately, Rachelle, for those of us who favor investment sustainability, the anti-ESG sentiment is alive and strong, probably growing stronger as we get closer to political season and specifically the election next year. The good news is that it's more of a political talking point now that some of the red state legislatures have made it a cultural war, if you will, against wokeism in the U.S. It's more of a political thing than an investment thing. Most of the investment managers are a little worried about it. They obviously don't like to be in the negative limelight, and they've pulled back some of their ESG marketing. But it's not really affecting the principles of ESG investing, which is to watch out for climate risk. So I think you're going to end up seeing a backlash start to grow in some of the red states like Texas and Oklahoma and even Florida by fund managers who want the freedom to account for climate risk in their portfolios. So you'll start to see that grow in the legislatures of those states, despite the fact that the politicians are leading the charge.
And it's interesting because obviously we know from Larry Fink and his approach to this, and then most recently we saw less mention of sort of ESG investing, still saw some mention about climate risk. He said, it's been 2 years since I wrote that climate risk is investment risk. And in that short period, we've seen a tectonic shift of capital. Sustainable investments have now reached $4 trillion. So is it a case of sort of saying one thing, but then actually seeing the investing showing up in ESG, but perhaps instead of sort of labeling it as ESG, climate investment risks that everyone should be really preparing for?
I think what's happening is that ESG as an acronym, it has become sort of a fad even among investment managers. It was always confusing. Environmental, social, and governance investing. You're taking in three very big themes there into one acronym, and they did it for marketing reasons. And I think probably we'll end up seeing the term ESG fade along with some of the past socially responsible investing that we had 10 years ago. And climate investing, accounting for climate risk, accounting for flooding and fires and damage to assets and insurance risk is just going to become mainstream investing of the future. And that's actually good for investors and for investment managers. Why Fink decided to back down on his letter this year is the result of much speculation. He said a couple of weeks before that in Davos that BlackRock took in $400 million in assets last year and lost maybe 10 million to anti-ESG sentiment. So it's really not hurting their business, but his toning down his rhetoric probably reflects that the investment management industry is kind of getting to the end of sort of ESG fad. That doesn't mean that all these stocks and funds behind it are going away. They're doing well and will rebound when the economy does. But the fad itself is probably going away.
Now let's talk about people who want to invest in this space. I mean, a lot of people, when they think, obviously, electric vehicles, you think Tesla. But in your notes, you're talking about that Tesla is, for the first time, defensive at this point. What does this mean then if you're trying to invest in Tesla? What's the mindset you should be having right now?
Well, I mean, it depends what a bigger Tesla fan you are, right? What I was saying in my column yesterday on Callaway Climate Insights is that this is the first time that Tesla, in its corporate lifetime, has really been on the defensive. It's always been the darling stock, the one going to unimaginable highs. Now it's on the defensive. It's cutting prices. Its profit is shrinking because of that. Other big automakers are joining the electric vehicle craze, and so how Elon Musk handles this, what he does, whether he kind of adopts Tesla into say, a services model, focusing on software and electricities, kind of along the lines of what Lou Gerstner did with IBM a few decades ago, or whether he goes for the big innovation play like Steve Jobs did when he transformed Apple. With the iPhone and with Apple Music, it's going to be interesting to watch. For investors in electric vehicles, this is really the main touch point. You can invest in wind power and solar power. Even carbon storage removal is starting to become big. But the main touch point for us as consumers is going to be electric vehicles going forward. And Tesla is just one of a growing number of automakers you can invest in. You know, Rivian is out there. They're making their product. Fisker is out there. Lucid Motors is out there. But really, for my money, Rachelle, the big successes are going to come from the major automakers that can scale EVs: Ford, GM, Volkswagen, and Tesla.
And then as you look, you mentioned Tesla, but also some of the other parts of the supply chain as well. Are there companies within the supply chain that really stand out to you as the ones to watch?
Well, there are, there's a lot of supply chain elements. The mining companies, the lithium makers on batteries. We didn't even talk about the charging companies like ChargePoint, for instance. The electric charging companies. That's a fascinating micro industry in the EV story itself. I mean, you're not going to be able to drive these EVs around without an adequate charging network. Who owns that network, or whether it's just a bunch of micro networks, is going to be fascinating going forward. So, investors should look at some of those charging companies, some of the lithium companies, some of the battery companies. I would look at lithium prices are way down this year, so people who want to get in on a bargain may want to look at that as a bottoming out type play. But we're going to see it. It's really going to be a rodeo going forward, and a lot of fun. And I think the ESG stuff we talked about at the beginning of the interview was just the beginning of the craze. And now that the kind of marketing fad is gone, we're going to start to see real stocks and real companies adopt climate and renewable energy into their plans, and we'll see new winners come and lots of losers.
And what about in the media space as well here? Because clearly this goes obviously beyond just some of the traditional that we're seeing, a lot of this media as well.
Well, the media, I'm from the media space, you're from the media space. I used to run USA Today and some other media companies. And I decided a few years ago I was going to dive into this climate story because I really see it being the big story going forward, not just from climate finance, but from how the world is run, what migration story, obviously the weather story. The UN came out this morning saying that last year was one of the worst years ever for climate, and it's going to be even worse this year. Half of Asia right now is under an unbearable heat. So, I really wanted to think of what's going to be the story for the next 20 years. So I jumped on it. And lots of other media companies have followed suit. Pretty much everyone's got a climate beat or a climate newsletter going on right now. So there'll be a shakeout in that as we go forward. There's media constantly reinvents itself. We saw the sad news about BuzzFeed News yesterday. And the climate media will rise and then shake itself out. I think the main story, Rachelle, is climate finance, because that is investing in the solutions behind what's going to help us adapt to climate change going forward.
Indeed. A big thank you for joining us, David Callaway, Callaway Climate Insights founder and editor-in-chief. Thank you for your time this morning.